Welcome to DIY Finance Hack. My name is Eddie, and I work in corporate and a passionate part time investor. I've purchased my first investment properties in 2009. 2 years later, I've started investing into individual stocks, then LIC, then stocks paying high dividends before I discovered ETFs. I want to share my investing experiences, mistakes, and ideas with some fun. You'll see my videos featuring my pets, favorite places, and things to do. Let's go through my top Australian ETFs to help you to become wealthy. I'll explain what is an ETF, why invest in ETF, and how do you invest in ETF. And finally, I'll go through my winning strategy. I will demonstrate and show you how I do my own analysis, the website that I go to, and how I do my research, which is based on actual facts and data to help you make your investment journey easier. Let's go through my spreadsheet. So I've listed all the various ETFs. I sort them according to 5 years annualized return. So the highest return is at the top. I'm going to go through the ones highlighted in yellow. These are my top ETFs. The reason why I picked them is because I understand them. I understand which companies they've invested in, and they have very good 5 years, 3 years, 1 year annualized return. Let's look at the first one, NDQ. So NDQ tracked the performance of the US NASDAQ best tech companies, famous companies such as Nvidia, Microsoft, Alphabet or Google, Tesla, Meta or Facebook. The next one is IOO. So this is a global ETF, gives you access to 100 of the largest global companies in US, Europe, and Asia. So companies such as Apple, Nvidia, Alphabet or Google, Samsung, BHP, and Toyota. So it's a really good global ETF. The next one is Qual, QUAL. So Qual gives investors exposure to a diversified portfolio of quality international companies. So World ETF X Australia. So this is another good one. The next one is Moat. I do like Moat. It gives investor exposure to a diversified portfolio. Priced US company, so it's US based ETF with sustainable competitive advantages, according to Morningstar's equity research team. So lots of industrial, healthcare, and IT. Companies such as Pfizer, Walt Disney, Nike, and Starbucks. So I do like this ETF as well. So this is like the way this ETF invest is like the Warren Buffett style. Look at the next one, IVV. I think we all should know IVV. It tracks the S&P 500 US index. Very simple. Good return as recommended by the great Warren Buffett as well. Look at the first one is VTS. Again, this track the US index. This time, the top 500. So it's a good one. It's low cost as well. The next one is VGS. I do like VGS, and I know a lot of the investors do like VGS. It invests in companies from around 25 different countries, including US, Japan, UK, Canada, France, and Switzerland. So it has over 1,500 companies. So this is very, very diverse. And the last two is ETF that tracks the Australian index. So VAS, it tracks the return of the Australian S&P ASX 300 index. Good yield. And VHY, it tracked the return of the Australia High Dividend Yield Index. So it invests in Australian companies that have higher forecast dividends relative to other Australian companies. So a lot of the big Aussie banks and mining companies. Thus, the high yield of 5.57. There you go. Great list of ETFs. Have a look. Pick the ones that you like according to your investing long-term strategy. Make sure when you pick them, don't pick the ones that overlaps. Some overlapping is fine. For example, you wouldn't purchase IVV and VTS. You would just pick either IVV or VTS because they both invest in the US. IBV invests in the S&P 500, and VTS invests in the total US market. And you wouldn't invest VAS and VHY as well. They're just too similar. I'm going to show you how you can do a quick comparison in terms of the total return. It's simple just by using Google. What you do is you just put down their ticker symbol. So I want to start off with IVV. I want to check the total return of IVV and compare it with other shares, and I'll explain to you the reason why IVV, which is one of my favorite ETF, why it's really powerful to invest in IVV. So look at IVV. There you go. You search for it, and then you'll see the graph here. If you click on 5 years, it shows you the total return over 5 years. So past 5 years, total return is 97.92%. So almost 100%. So you would double your investment over 5 years. And if I do a comparison, compare that to another favorite share, BHP, as an example. Okay, so 5 years. So the BHP total return over 5 years is only 32.31%. So if I do another comparison, so it's actually here down here. Let's look at another favorite stock. Let's look at Rio. Okay, 5 years. Then you look at it again. Rio's total return is only 29.03%. Do another comparison. Let's do Telstra. 5 years. Wow, see, look at that. Telstra total 5 years return is not even 10%. Let's look at something that I know, ResMed. 5 years total return for ResMed, it's pretty good, 72.15%. But as you can see, IVV still win. As you can see, it is so hard, so difficult to invest in individual stocks. You might as well just invest in IVV, in ETF. So if I look at one more thing, Macquarie Group, I think this one here might beat IVV. Let's see, 5 years. No, there you go. So it is absolutely difficult to pick a winning stock. It's a lot easier to invest in IVV, in ETF, because with ETF you get a basket of lots of stocks. So with with IVV, you invest in the index, in the S&P 500 in the US, all the top very strong companies in the US. There you go. I've just shown you. It's the index beats individual stock, so it's hard for a for someone that have individual stocks to beat the just by investing in the index. So another website that is worth going to is the morningstar.com.au, investments ideas. So this is where it lists all your ETF. Let's have a look at all the Australian ETFs, see the full list. This is great. It lists down all the ETFs. Click on the yield, cost, and performance. And what you can do is you click and sort by the 5 years annualized, and you see the top one at the moment is LPGD, that have the a very high annualized return of 20.73%. You've seen this in my spreadsheet, so you can always copy and paste into the spreadsheet to do your analysis. Great website. So how do you invest in ETF? Go to your favorite online broker. I use NapTrade. So you can sign up to NapTrade. It should take you less than a couple of hours. Then you log in and you purchase ETF just like individual stock. So the ones that I've shared with you before, all you need to do is you put in the ticker symbol. For example, if you want to purchase NDQ, you type in NDQ and you can start buying NDQ. Let's go through some of the well-known investing strategies. The first one fund portfolio. If you want to keep it very, very simple, you can just invest in one ETF. For example, VGS, and you get the world. Or IVV, which invests in the S&P 500, like Warren Buffett recommended. Two funds portfolio. You can invest in international ETF plus the S&P 500 index. So VGS and IVV as an example. Next up is a three funds portfolio, better known as a boglehead portfolio. On top of VGS and IVV, in a two funds portfolio, you can add VHY. We are very lucky to live in Australia as we can get access to really good quality companies that pays great dividend. So I would invest in VHY and reinvest the in distribution and let it auto top up. And you can always turn it off during retirement for the extra boost of income. And finally, the four funds portfolio. As the fourth fund, you can add quality ETF like mode that's less volatile compared to other ETF, or NDQ to boost up your performance. When you invest, your goal is to beat the index. So if you look at the S&P 500, annual return is around about 15% per annum in the past 5 years. So at least you want to beat that 15% mark. If I have to pick one strategy, I would pick the four funds portfolio and you blend it with other individual stocks. Now, the reason why is that it has a good mixture of growth companies, good companies that pays good dividends, and safe companies. For example, if you pick Moat as one of your ETF, it invests in good quality companies and it doesn't go up and down as much as some other growth stocks. Thanks for watching. Please remember to do your own research, like how I have shown you. My video is only for educational purpose only, and happy investing.